Good afternoon, everyone. It is Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Market Analysis. It is February 23rd. February is gone. I feel like the groundhog came out, and now it's the 23rd, like 20 days later, like a little back to the future, but going forward. I need some of those fancy shades. I believe Todd has some, but welcome. Glad to have you guys back. Let's just dive in. Today's been an interesting kind of not necessarily a watch only type of day, but I mean definitely obviously movement back and forth. Pal has had a lot to say, and we're going to go through kind of what he talked about today, what the reactions look like, and really how we trade it kind of going further through the rest of this week. Um, let's just dive right into things. Let's go through, and again, for those of you that are new here that don't know me, I know a lot of you guys are at this point followers and you're coming week to week, and we definitely do appreciate that. Hopefully, you're getting something out of every session. But for those of you that are new, welcome. I do these sessions because I'm really at heart I'm a teacher. I love to teach people how to trade the markets. I've been personally trading myself since about the 1999, 2000, Y2K. If some of you remember that, when the world was supposed to end because computers didn't have an extra zero. Basically the tech bubble is what I traded through. Tech bubble, housing bubble, been around for about 20 years now. I hate to say that, but it's like, wow, am I that old? Um, Traded a number of different things. I'm not a 12th generation trader. I am basically I'm the first generation. My dad was not a floor trader. He actually worked for IBM as a programmer. So I guess ones and zeros are kind of in my nature. But you know, learned everything. All the wrong ways to do things. Buying books. Back in the day, would go to all these different seminars. Um, Started with stocks and traditional options. Found currencies about 4 or 5 years in. Fell in love with that market. Learned about futures. I became a financial advisor. Worked for one of the big three banks. Learned really about bonds. Kind of made myself a little bit more well-rounded. Didn't realize how much control and influence the bond market actually had. Realized very fast that financial advisors are nothing like you would assume they are from the outside. Um, I wanted to get in there, talk charts, talk trading, talk making money, and that's not what advisors are there for. Surprise, surprise. And it ended up for me, I knew I wanted to come out and teach people. So again, my goal is for you guys to get some type of a golden nugget, or a trade setup, a new part of your strategy, some type of resource that you guys can look at each and every week. And if you guys have questions about anything I do, please go ahead and type them in chat, or at the end, I will give you my email address and you're more than welcome to email me and ask questions. I typically do get, and again, don't feel bad about asking questions. I typically do get at least probably anywhere from 1 to 3 emails a week asking for a clarification or asking for a link or something like that. So you guys, again, don't feel bad. I am totally open. I do these because I want to help people as much as I possibly can. Um, so again, any questions, please, obviously shoot them to me. But if it is a Nadex specific question, a a praise or a complaint, those go directly to Nadex. Trading questions you can send to me. All right. So let's cover the agenda for what we're doing today. Let me bring this back over. All right. For those of you that don't know, Nadex, trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of the transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere, and Nadex is subject to U.S. regulatory oversight by the CFTC. For those of you who didn't know, Nadex is a registered trademark of the IG Group. Here's what we're covering today. Upcoming news events, and a lot of this today is going to be about what we just heard, Pal speaking, and again, there'll be different, probably headlines all day about this. We'll look at what it looks like for the rest of the week, where our best trading opportunities are. Um, Said this before, many people are like, I'd love to trade the markets, but I don't have 12 hours a day to sit in front of a computer. Great. Learn to become a news trader. It's one of my favorite things to do. And again, we'll talk about what are the top news events going to be for the week. Now, again, there's two sides of this. There is news trading and there is technical analysis. So again, both of them are very important to have in your kind of quiver. But again, news is one of those things that everybody could start trading. And I know it's funny because a lot of the professionals and the quote experts out there are like, oh, you should stay way far away from news. Very bad, very bad. It's like the opening, right? Everybody tells you don't trade the open. Some of the best trading opportunity exists. not necessarily hit the button, but to set up your trades for the rest of the day. So again, that's what we're here for. After that, what we'll do is we'll dive into the indices and see what those are looking like. The last I looked a little while ago before putting the baby back with the boys was lots of red, a lot of kind of whipping back and forth. Um, We'll talk about why. Then we'll cover the Forex market. I know a lot of you out there are not necessarily Forex traders. I love it. It's the largest market in the world. Again, being able to trade it 24 hours a day. Even Nadex now at this point, when we have a U.S. holiday on Mondays, has currency contracts open. So it's kind of a nice little benefit. And again, I know some people are locked into, I'm only trading the indices. Great. You're basically saying that, you want to go with, in a marathon with no shoes on. Again, trading multiple asset classes is the way to get ahead, guys. Sometimes there'll be a flat market, but other ones are going crazy. Again, currencies is great for that. Then we'll cover commodities. Now, commodities have been a little bit, I don't know, wacky. I don't know if that's a professional term or a politically correct term, but wacky. You get gold is holding firm today, not holding firm, but it's been down, but it's not horrible. Where silver was taking it on the chops pretty good. Gold was kind of whipping back and forth. Oil's like, where's everybody else going? I want to go too. You know, kind of getting away from the oil's kind of like the lost guy today. But again, we have oil inventory reports tomorrow, so it's a very important thing that we want to make sure that we cover. With that said, this is what we're going to cover. First things first, let's go into news. Let me kind of bring this over here, and we're going to start covering really, really what's going to matter the most here. All right. Obviously, this morning there's been a bunch of different news, right? The biggest one, obviously, is going to be Powell speaking at 10 o'clock this morning. We knew that this coming in. We've known for a while that this was going to be something that was going to, really be kind of coming down the pipe, right? There was a lot of, and let me click on this real quick, just to make sure you guys can kind of understand this. Now, he's speaking for 2 days. He'll be speaking today, and he will be speaking tomorrow morning at 10 a.m. Now, a lot of the bang, I believe, is coming out today. I don't, tomorrow will be additional questions, but I don't feel that tomorrow will be as big of a mover. I'd be very surprised, and a lot of people kind of, they were trying to position themselves ahead of time for what he was going to say today. Now, we started off the morning with the pound having, good claim account numbers. They were down. Powell was speaking. Consumer confidence was up. And again, that's always a great sign, right? When the consumer feels positive about everything, and again, going higher from 90.2 was the consensus. Last time it was 88.9. That is great. When the consumer is confident, they spend money. Retail sales is higher. Companies make profit. They report positive earnings. The stock market tends to go higher. People love this. This is great, right? This is that positive feeling that everybody likes. Now, Macklin is going to speak at 12:30 today. Now, Canadian economy has had some major issues recently. They were rocking and rolling for a while, and about 2 weeks ago, there was a major reversal there. And if you guys look up, I mean, the dollar CAD's only up about 5 right now, but woof, they've had some movement. I mean, this was just beating up the dollar. And again, what he says today about recovery and what it looks like, pretty important. Okay. Now tonight, I know a lot of people don't trade New Zealand. They're not, they're not expected to be any type of rate change or anything tonight. And unfortunately, we don't trade New Zealand at Nadex. But again, the monetary policy statement talking about what recovery looks like also will have an effect with the Aussie. Okay. So again, New Zealand, Aussie, they're kind of linked together. Now tomorrow, a lot of stuff going on tomorrow, right? Tomorrow morning, and I say tomorrow morning, but it's kind of late for the pound. At 9:30 a.m., we have monetary policy report hearings. And again, this could be a big mover for the pound dollar, the pound yen in particular. Again, whenever you get these late releases for the pound, and again, I know it's early for us, but it's late for the UK session, there tends to be some fireworks, okay? Tomorrow at 10 a.m., Powell is speaking again, and like I said, I don't think his comments, and again, we'll go through a lot of them in just a second, don't think they're going to be as big. Now, crude oil inventory, last time we had a kind of rock star, big number, right? And we had a lot of movement off of this last week. We were at minus 2.1 million and it came in at minus 7.3. Now, this week, the forecast is, even after a big number last week, they're expecting a minus 6.5 million. Now, whenever this number gets higher, we tend to get a miss, right? There's a lot of opportunity here for disappointment. No, this is expected to be a minus 6.5 million barrel reduction in inventory. But what happens, because again, remember, we weren't using it, half the place was frozen down, there was no power, it wasn't being used. What if this comes in at a positive number? What if we have a lot more oil? Could this send oil tumbling tomorrow? Quite possible. Quite possible. So again, a very large change in oil inventory tends to be an amazing trade setup for oil. So that, and again, you can see how right they are. Not much, right? They've already been right once in 2021, but it's only like once a quarter, so they've already used their right. So again, you can see some of these misses have been absolutely huge, and now that they're going big, we'll see how that works out. Also have some New Zealand news and then some Aussie news tomorrow night. But again, Powell will probably be kind of the story of the day tomorrow as well, right? Thursday morning, we have the preliminary GDP number. Now, again, this is important. This is quarter over quarter. Okay, so it's not the yearly figure, but having a 4.2, the previous was 4, is good. And again, we're still coming back from, again, a lot of the COVID data, right? COVID was obviously a big strain on the economy. It still is. It's not over yet. Seeing that GDP number is good. But again, this kind of goes back to the same question that I keep asking, and miraculously, I haven't heard anything yet, right? Last time, quarter over quarter, we're at a 4.0. This time, preliminary quarter over quarter, we're at a 4.2. We're talking about recovery. Vaccines are rolling out, but yet we just passed a $1.9 trillion stimulus package. What do we need it? I don't know. I mean, it's, they're talking about direct payments, but it's kind of like giving direct payments after the crisis is over. I mean, what is that really for? I don't know. A lot of questions to be asked there. And I know, I have some students in Atlanta that are quite, angry about the way that the 2000 to 1400 magically came out with a lot of promises. So, big question is, what are we going to do with that 1.9? And is that going to be the driver of inflation because we don't necessarily need it? We'll see. The last I heard was there was going to be a preliminary vote on that on this Friday. So again, not guaranteed, but the first vote on what we're going to do with that $1.9 trillion, yeah, could be interesting. And I'll tell you right now, if they change that number and reduce it to like say 1.5, 1.4, that is also going to have some crazy market movement, particularly in the gold market. And that'll be Thursday. And then going into Friday, we have some overseas news. And again, this is the first day of the G20 meetings. We're going to get some headlines with the G20 meetings. It's a I think most of the headlines and the big stuff will be on Saturday, not Friday. But we may get some early, right? It's early in the meeting. A lot of this is going to be how is the world globally going to handle this recovery? What type of kind of security are we going to put in? Ways to cushion it. One of the things that we haven't heard too much about. I mean, all the companies are researching COVID, and in particular the South African variant. That is, the data does not look as good as far as how well the current, and I say vaccines, but it's a virus, so it mutates, so it's not quite a vaccine. But how well that they work. They work great for kind of what we have right now. We've seen amazing numbers, but that South African variant is causing some problems where it drastically reduces the effectiveness. And that's just one. I mean, who knows? Maybe we'll get a Brazilian variant, and maybe there'll be I don't know, an Alaska variant. I mean, it's a virus. It mutates, right? It's just like the flu. So hopefully the G20 is going to help tackle that as well, ways that we can kind of go forward and what the new average looks like. But I will say on a global scale, when they talk about trade, recovery, low interest rate environments, all these things could be big traders on Friday based off the G20. I think a lot of it, though, in all fairness, because it is a 2-day meeting, I think a lot of it will be held for the weekend. This could lead to some big gaps for Sunday night trading. If any of you guys are out there like me that love Sunday nights because we can start getting in there doing our trades, a lot of the G20 data that comes out will be Sunday night trade setups. So I'm expecting some big gaps on Sunday night. A lot of different ways to play that. I know I love doing it in the currency market, but there's a lot of ways to play those on Sunday. All right. So let's go into the PAL data. So I have a couple different things up here. Let's talk about, I guess, let's talk about where we are with recovery. Okay. First thing he says is at 1029, we have a long way to go to full recovery. Okay. Now, again, I don't know that many people are saying, hey, listen, we're recovered, we're good, right? I don't think anybody believes that we are 100% back up, but I do feel like we have ground through, I feel like we've been through the worst at this point, right? we're not fully back to where we used to be, but I do feel like we've already hit the bottom and we're getting better at this point. So it's not there, but we've come through the darkest, the darkest part of it, right? In my opinion. And I feel like the economy believes that, consumer confidence, overseas recovery. But saying we're a long way away to me is a very kind of dovish look on this, saying that, hey, listen, if I just read this headline, I'm looking at they're not going to raise interest rates for a little while. So that's kind of important. The most important thing for the economy now is vaccinating. Great, but I feel like that's our economy. And remember, there's the whole rest of the world needs to be also vaccinated at the same time. So it's a great statement, but I don't know that that's kind of the. I don't know. I mean, teachers. I know in my state at least, people are up in arms. It's impossible to get people done. My mother's been able to get it. She's been in that group for 4 weeks now, and she's like, "Hey, I can't get it." I mean, doctor's like, "Yeah, we don't have any." I mean, if I did, I could give it to you, but I don't have any. Teachers are not vaccinated. That's a big problem as well, around the U.S. as well. Um, so again, that's a big one. He's not going to comment on a Fed decision on banking dividend restrictions. Okay, again, kind of taking a little Dovis look there. Powell says the single best thing to prevent, is this, to keep the monetary policy accommodative. Again, all these things are very dovish. Again, kind of more weaker on the weaker side. We're not taking any things. And again, monetary policy is a broad tool, and it can't specifically target low-wage workers and minority workers, right? So I don't know. This one, there's a lot of different ways to take this one. I mean, worrying about the low-wage workers and minority workers out here is extremely important, right? And the fact that he says it's a broad tool, we just can't specifically you know, these are the people that are hurting the most, right? This is who the stimulus is for. Whoops. That's who the stimulus is for. To forget about these people is an absolutely huge mistake, and I'm very shocked and surprised by Powell that he would say something along these lines. As far as inflation goes, oops, not that one over here. Inflation is the other aspect of what the Fed has control over. Remember, the Fed is the one who controls the actual interest rates. It has nothing to do with the president. Biden can't say we're going to raise interest rates. That's not his job. Okay. First statement here. Expects inflation will be a bit volatile over the next year or so, not months, year or so. Okay. He says perhaps wants a very strong connection between budget deficits and inflation, but there hasn't really been seen lately. Again, talking about a lot of the old ways of doing things. We talk about low interest rates and inflation. Upward pressure on prices as we grew up and won't be large or persistent. Again, it used to be that you used interest rates to control inflation, but right now everybody in the world has a low interest rate environment. And people are talking about this being a thing for a long time. You know, I didn't own a house in the 1980s. I was a kid, during that time frame. But you look at the 80s and the 70s, and you look at what the interest rates were for even just mortgages. You hear people talking about 18%, 22%. I mean, we're over here balking right now that oh my God, it's gone from 2.5 for a mortgage up to 2.6 or 2.8. They were dealing with 18 and up into the 20s, right? Even higher in some places. So again, is the new norm? Are we going to see the same type of inflation that we've seen? And thus far, he's saying that we haven't seen it. So are low interest rates here to stay? We do not expect inflation to rise to troubling levels. Okay, that's an interesting statement because again, if it's not going to troubling levels, the way that you stop it is to raise interest rates. When you raise interest rates, it makes your currency more expensive, but it crashes your stock market. Interesting where we are overall with the stock market. And now he's talking about we don't need that tool right now. So could the stock market go crazy, right? Powell says that Feds know to keep inflation under control, but it's not a problem for us at this time. Not good for gold, right? I mean, the gold hawks are like, hey, inflation, let's hedge against it. It's not going to be a problem, and we're keeping it under control, which is like, not necessarily the best thing for gold. And there's no intention of repeating the inflation mistakes of the 1970s. So again, if you don't know about that, I was born in 1976. So for me to know about the inflation mistakes and what could happen, again, it may take, what happened in the 70s is not right now. So again, it is two different, in my opinion, it's apples and oranges. It's nice to bring it up and talk about how we've learned from our mistakes. But you're also talking about something that's, 40 odd years ago, right? So yeah, it's a little bit different, right? A little bit different. But thank you, pal. I appreciate that. Talking about how we've learned. So a lot of stuff that has been brought forward. Tomorrow, I don't believe they have any agenda set for tomorrow. Let's see. No, it's the same thing as today. So again, there'll be questions. Look, market nervousness growing over Powell's testimony, right? Rousing bond yields and accompanying inflation fears adding. So he didn't really say much that helped a lot of people. Hopefully, we get some more clarity over that tomorrow. It says USD surging treasury yields are affecting it, and again, everything is. And look, Powell may be dovish and he was absolutely without a doubt. So you guys got to pick what's going to be best for you to be able to trade. And like I said, things like oil inventories, maybe even the currencies a little bit, maybe kind of where we go. So let's go over and dive into the indices and kind of get a view of those first. Actually, yeah, we can do it over here. We'll do it in here. I haven't been on this one. So you can obviously see that this has been quite a drop. All right. Yeah, it's down. Do you think the market was happy with Powell today? And the answer is probably not. Now, most of this really started, I know you guys, right here was the UK Open. Now, you guys can see this blue area. This 13,375 was an area that we've talked about before. Buyers had stepped in. We can see that it was an area where we had basing, right? And again, this is that Harry Potter setup that we talk about all the time. When we see basing in a level and pullbacks, again, here is basing on the top. It's a level that we've seen hit. We're waiting for a break. This was not the break. This was the fake out. Here was the drop. Here was the base. Here was the pullback. And then here was the absolute collapse down to the next level where we expected to see some buyers step in. And again, you can see that was really the start of the move. We expected a hiccup here, right? We had this marked as a hiccup, and what did it do? It hicked up. It hit, based, pulled back up, went right back to that prior level, and boom, collapsed, right? Down to the start of the move, okay? So now where we are, you can see we hit bottom, we pulled back up, and we're kind of basing. Now that Powell has kind of gotten all the headline news out there, the question is, what do we do with it? I would say there's a couple different areas we need to watch out for. Obviously, comments about, things aren't too bad right now. A lot of this was emotional-based moves today. Emotional-based moves tend to get retraced. So there's a couple different ways we can play it. And again, if we want to mark the curve off, I know I use the curve in the other sessions a lot. I would say that probably at least for targets, we'd want to use this area. All right. At least, oops, ooh, not that color. Wow, did I miss that one? Yeah, it's right there. Whew. Now we can't go to that baby color. You know what? And I guess we could actually use here. We'll just use this one. That one's fine. All right. So remember, the reason why we use the curve is to help establish a level of kind of a bias, for lack of a better word, a bias, right? Are we looking more long? Are we looking more short? Now, right now, we're obviously at the extreme reach, right? And again, we had that area marked off. We knew that was an area where we're going to have, supposed buyers come in. So dropping it down to a lower level, again, we can see that we have a decent level down here. And again, this level was kind of pushed, but right now for a kind of a smaller intraday curve level, I would be using kind of this range right here, right? I'm gonna extend it up to, and I wanted a really clean one, but I don't have one. I'm gonna use this level right here. So right now we are, I would say, in the middle of that curve, and it's kind of one of those levels where it's like, what do we do with it? Do we go long now? Do we go short? I mean, it's 12:30 in the afternoon. All the Powell drama is out. Is it going to reverse right now? I would say the answer is probably a little bit of grinding at this point. We know Powell speaking again. We got to see where we position ourselves. But right now, I would say that this is obviously an area up here, 13,325, 324-ish area. We had some basing. We had that pullback. It's that Harry Potter that we liked. We know there's some sellers up there, right? Because if there wasn't, price would have continued to push higher, right? But they stepped in right here. Right at that, whoops, I just killed it. I don't know where it went. Right here. We know that they stepped in. All right. So right now, I would say that these are the two areas we'd be looking for some movement off of. I would be curious to see if we are able to kind of maintain and maybe push down a little bit lower, and we end up closing around this 12,835. Are we going to have a bit of a retracement based off of what we saw today? Will price in the European session rally back up, preparing for another day of Powell testimony? Okay. Now, again, a lot of the moves have already happened. Again, this was the move yesterday, but the question is, which of these zones are we going to use for tomorrow? So what I would say is, again, right now there may not be a lot of trading opportunity available in this position. I would drop it over to the 30 minutes, right? And again, we're looking for areas where we've had strong movement. And in fact, at this point, we could use the Harry Potter, but there's a decent level. Come on, you can select. Nope. All right, let's delete the line. Get rid of the line. There we go. I'd say there's a decent level right there. So for me, what I would do is I would say, hey, listen, if we can get to either of these two levels, 13,398, 12,835 or 834-ish area, these are two levels that if we're there by the European session, I could definitely be interested in shorting them. I would also use those levels and say if we are not there at the European session, but we are approaching either of those two levels at the US session tomorrow, those could also be great little levels to kind of bounce things off of. And again, using this, we know that there are sellers here. We know that there's sellers here. So this is kind of an area that's kind of fluid. Other side, when we flip it, we have the same idea, right? We know that we had buyers stepping in here, right? And we know that on the higher time frames as well, again, we know that there's a lot over there, right? Here I'll drop down to 30 minutes. You can see right there that we got a lot going on. We got an hourly level, a 30-minute level, and then some protection a little bit lower. So either of those two levels I think is fine. Looking across at the S&P, same setup. Here is let's see, 12 right there. Here was the UK. Let's go to here. There you go. Same level of basing right there, right? And then here was your US Open trade down. Let's clear those. All right, let's go to here. Now, these were two patterns that we drew from last week. These were the Harry Potter patterns that we were talking about. They both took a bounce. All right. Looks like this one went through. Let's see. I should have moved a lot of these out of the way. Here is, I'll just put this here, right there. You guys can see where the movement is. I'm trying to, let's see, let's make this thicker for you guys so you can get it a little bit better. Right there. Drop down to an hourly. Can't see it as much on this one, but it's on the 4-hour. There we go. There. All right, you guys see how this line cuts right through here? Do you see where this big green candle is coming from? This area of basing here is kind of where we were looking for downside targets. And you can see it didn't spend much time. It literally came all the way down, touched it. This base and this push is really where kind of the target was today. All right, so we're going to leave that there and know that there are some issues. Now, we've rallied back up again. There's a lot of ways to play this one, okay? Fib traders are looking to get short at this point and probably would have been short off this move. I would say for me right now, I'd be using kind of, and again, we know that there's sellers here, right? We know that there's some sellers here based off the basing here, but this is an hourly and a 4-hour level. So I'm going to kind of use this as my curve as far as this goes, or as far as this pair goes, right? And talk about it there. So yeah, it's in that middle range. It's kind of in no man's land. This one for me, I would say I'd expect this to come back down, and most likely the same kind of scenario that I just talked about, right? It looks like around 38, was it 38.06 is where you'd be looking for this one. I'll put it right there so you can see it. 38.10, 38.06. If we can get there at the European Open, again, I'd be willing to take this one long for a bit of a retracement off of today, as well as the US Open. Again, drop it down to those 30-minute levels. That's going to be the best way. Snag one of these things, and then again, play another power ride tomorrow morning is probably what's going to be the best bet on this one. All right. But right now, I'd be marking off this 38.06. I'm kind of looking at this from now till the end of the day. All right. Dow, kind of the same thing. You guys can see the Dow just pounded right into that level that we talked about. We had it marked off here. Look at that. It held the 31.20. We talked about this last week. Here's the level of basing, and again, tested here, tested, right, tested here, front run here, and again, that's what held, and it's the same trade setup. Same thing, probably there. That level went through, yeah, and pulled back and Harry Pottered, yeah, yep, same thing. So for me, 31.20, same analysis on all three of them. I think either of those is decent. Ways that you can play this through the rest of the week. Again, I would say call spreads are probably the best. I expect that we will get at least one more big spike tomorrow from something that Powell says. Otherwise, there would be no reason to have it for another day. But kind of the same thinking. I would say it'll come down, kind of see where it prints, and depending on what this does, I would actually be interested in taking a Harry Potter trade tomorrow if we can get the setup before Powell speaks. If we can get here based and rallied before Powell speaks, I'd be willing to take this one long. And this would be targets for me down to, let's see. First target would be at 31,000. Second target would be at 3,900 for tomorrow. Okay. If we can continue to kind of get this, grind down for Powell, right? It'd be a push down, base, pull back up, entrance. Whoops. Nope. Right there. Break of 31,150. Yeah, things popping up all over the place. All right, so there's the Dow. So let's switch across and let's go into the currency realm. All right. This one I had a couple different things set up on it. Oh, I thought I updated this one. All right, so the Aussie is continuing to drive higher. All right. Now you can see, and this is a 4-hour chart, over the last couple of hours, the Aussie has really kind of started to pull back again. And I think a lot of this had to do with kind of, that PAL experience. We've had a big push up. So there's a couple things I'm looking for here in trades. Now, I like this level of basing. That's not the original level here. The original level is formed right here. Let me change this to white for you guys. This is one that I'm looking for probably later in the week. This could be a Thursday trade setup. I'm looking for a break of 78.50. And the reason why is this is a very strong emotional push forward. We did get some basing. It tested again. So this is technically, the next time it comes down, would be hit number 3. I'm looking for this one to go short. And really, all the talk about gold and interest rates, and we're not going to raise interest rates, and there's inflation, has been what's been driving this. Today's talk about, again, monitoring it, controlling it, not having a runaway with crazy inflation, has kind of given the dollar a little bit of strength and also weakened the Australian dollar. Weakened gold and the Aussie, right? And that's why we've seen this pullback and now the chop. If it just suddenly turns and goes higher, no harm, no foul. I don't have to worry about anything. What I'm looking for is, again, the setup there, looking for profit targets to kind of drop this way. And really what I'm looking to do here is I'm looking to retrace a lot of the craziness that happened here, right on the 19th. The 1 to 3 target I like. The 1 to 5 target is probably okay as well. Any kind of profits to the downside, I want to make sure that I'm out before 77.66. That's the last time we had basing, and that was the start of this big rally. So, you could say that there's target 1 on the break. Here's target 2 on the break. If you like, multiple entry targets, but I'd be looking along something along those lines. Set yourself an alert if you know how to do it. 78.47 is where you're setting that alert. Look for the break, the base, the pullback, and that will give us our established level of risk. It's only about 13 pips, so it's pretty easy, and look for that to collapse back down. Also, again, same trade setup, more or less. This one didn't kind of have the same rally. This one also, it's the same thing, right? We're looking for this one to really come back down to this level. This is an hourly trade setup. We're looking at an established level of risk here. Boom, right there. Right. And this one, I would say that the 1 to 5 is also a pretty decent target. The risk level on this one is only about 7 pips, so rather on the smaller side. Remember, for these kind of Harry Potter trade, these reversals, a lot of times knockouts are not necessarily the best unless you snag them at the very, very top. Reason why is because this is continuing through. It's going farther and farther away from the ceiling, and it's very hard to grab the top. So what I would do on this one is kind of see where we're at later on today. If we can kind of grind sideways and come down and start basing here for the European or for the Asian session tonight, I would start looking at some of the call spreads on this one, or maybe even the binaries, depending on how much premium is jacked into those. Again, make sure you watch your strike differentials. If the strike differential is too far for your liking for this one, go across into call spreads and look for call spreads that drop down. And in fact, on this one, there's a couple different setups here. Here's your 1 to 3, which is I'm okay with. Here's your 1 to 5 level, which again, I'm still pretty okay with that one. We'll pick this green here. And here's your 1 to 10 if you wanted something bigger on this one. And I think this one, with a true reversal, I think this has the ability to make it actually all the way back down to that level, right? Again, before we get back down. Overall, by Friday, though, I would make sure that we were out. Definitely get your stuff out of this one before 82.05. That's the last time buyers truly stepped in on this one. If this collapses and reverses, you want to make sure we don't go get too greedy and have it roll on us. All right. Looking at the euro yen. Euro yen, let me move my curve over. And you can see we drew the curve last week, right? We drew the curve last week on this one, talking about top and bottom being this area here, as well as the area up top. And it's really done nothing but kind of run right down the middle, right? I wouldn't say that this one has any decent level of trend. We've seen obviously a little bit of basing here. We came up and touched the 4-hour level up top right here. That happened, yesterday? Today, not much movement. And again, none of the news was really European based. I don't really see, let me see here real quick. There's not really any European news besides Friday with the Swiss economic barometer. I don't really know if we're going to get much movement on this one really before the G20 meeting on Friday. So again, I'd love to say that there's a trade set up in every position. There's not really a lot in this one that I'm really kind of in love with right now. I mean, top and bottom here's your kind of middle of that range, kind of no man's land right here in the middle. And yeah, there's just not a lot there that it's not like I'm like, yeah, that's a beautiful setup. That's wonderful. I mean, there's a small, let's see, there's a small zone there. And I could drop it to a 4-hour and you guys can see there's what the 4-hour look like. I mean, if you really want to take something and get, if you really need a trade entry, and you want to get a little bit risky, a little bit, you're okay with risk, you could potentially put a long in here at 127.45. But again, all we're doing is really chopping back and forth inside of that same level. So just be cautious about that one. And, even in the European session, not much movement in that one whatsoever. Now, pound yen. Pound yen has been pushing. Here's our curve, right? And we talked about this being our curve. The pound is, here, I'll drop it down to an hourly so it looks a little bit more impressive. Here's what we've seen, right? We know we were sitting inside of a 4-hour zone here. We knew that we had kind of a dialed in level right here and we've been unable to hit it. This is an hourly chart. This is what it's done since this morning. Nothing. We had one push up in 3 hours and then it just kind of flatlined on us. So what I would say, we're obviously extremely high in the curve. We're sitting inside of a daily zone, a 4-hour zone, and I think actually there's a weekly zone here as well. Now the weekly is a little bit higher. It's a daily and a 4-hour zone. So it's one of those things. The pound is going to need some really positive data to punch itself higher to kind of break through. At this point, I mean, I would not be looking to take this long. I would say if we can get a little bit of a pop up, if you're looking to take this one short, right around 48.95 is where the next daily level starts above where we are. It's in one right now. It's grinding. I mean, if you wanted to put one in, if you really wanted to get into something for this one, and again, this may not even be a today thing or a this week thing. This may be a Sunday night thing up there, something along these lines. And again, remember, I'm very much an if this then that trader. I'm not I'm going to get in and kind of use a crystal ball thing. I'm waiting for this to come to me. This is about the only one that I'd be willing to probably step in. But like I said, I don't think it's not a today thing. Put it that way. Maybe tomorrow with the right kind of catalyst, but something along those lines. And this should be here. We'll use the higher one at this point. Okay. And what that is that's an entrance of, you guys can see it right here, basically 48.97. The risk on the top side is going to be up here at 49.47, and the profit target to the downside is going to be down here at approximately 47.44. Now, let me see yeah, I got locked out. Let me see real quick. And again, I know Todd's busy today, but we're trying to incorporate in some kind of Nadex contracts when there's one close. Let me see if we got anything up there. Yeah, there actually is. There's a 49.64. All right. Actually, let's see. I'll just pull this down. I think you guys can see that. You guys should be able to see this on my window. You guys can see them over here. Let's blow this up bigger. We were on the 4-hour. Let's drop down to a 4-hour here. Where is it? Oh, right up top. 4-hour. Oh, you know what? It was a daily. Oops. Daily from, I believe it was, let's see, horizontal line. I believe it was here. What's that? 47.33. Yeah, that's the right one. All right, so you can see where we're at. There is one sitting. Yeah, that's the one. You guys can see there's a couple different where these all are right now. I don't know if you guys can see these or not. There's a couple different ones all right up in this area. And you can see at 50.14, 49.64, 49.14, and 48.64, these two are not the ones we're looking for. But these top two, really the 49.64, 49.14, if we come back across here, you can see that we're right at that 49-ish number to 49.47. So it's always interesting when you have these things line up and you can see there's a lot right around. And again, here, I'll move this line here, right there. That's the start of the zone right there at 49. So you can see something along the ones I'm clicking for right now, the 149.64. If we can get a push up and a base in there, could be a decent position. It may not. Again, it's requiring about another 70 pips higher. If we can't get it today, being Tuesday, maybe Wednesday, Thursday, I'd be a little bit leery taking it on a Friday, but it's a level there that's, again, a very much higher time frame on the daily. We could have a reversal now. Hey, at this point, if we can get there, I mean, again, if we could pop in the next 24 hours, I'd like it. Sunday night is another probability as well. All right. So that's the pound dollar, kind of similar. You know, we've seen it push up. It's in a level right now. We had 40.88. Unfortunately, this one it's definitely moving. It's moving higher fast. We don't have anything clear on the top side until 142.96. So again, this is more of a dollar weakness, pound strength trade. I think that continues higher. Don't have a great entry on this one, unfortunately. I'd love to be able to give you guys and say, hey, listen, I like this one long. Do it, but I don't really have a great kind of setup for this one. We had this one level here and never got the pullback, so this one unfortunately left without us, but I do like it higher to continue to move. Pound dollar. All right, so I'm sorry, euro pound. So euro pound, we're pushing into a zone right now, and it's one of those zones that we've been looking at, we've been watching, we've been hitting, and we had all these targets set up to the downside. We were waiting for price to pull back. We were looking for 86.97 to get short. It didn't pull back. We were waiting down here for 86 or 86.70. It didn't pull back. We weren't able to get it in. There was another base that we had set up right here, actually, and this one did actually get triggered. This was a wick over wick. Okay. This one right there. This is all we've been able to deal with right now. Now, you may say, well, wait a second. Why are we going short? There's a green area right here. We should be going long. This goes back to that one little tiny bit of fundamental analysis that I talked about. I've been saying it since January. I felt that the pound was at rock bottom. They are a single nation. That again, it is much easier to maneuver a small ship than a large ship. The European Union in general is a very large ship. They're dealing with many different countries, many different people, many different COVID responses, and trying to be the same economy. I like this one short. If I could find another decent entry, I would be willing to take this one short yet again. There actually may be one in this level right here. And again, I'll mark it off. I just feel that the European Union is going to be lagging behind. There's just too many moving pieces. I would say if you can get into something on this one, 86.30-ish range, it's a very small risk level on this one, only about 8 pips. I think that would be a decent level. I typically like to get into this one around the European Open. The reason why is because that's where most of the catalyst comes from. As you can see right here, this is the European Open at 3 o'clock, and that's where the move came from, a majority of the move. Is it huge in this one? It's about 30 pips. So, I mean, there's some decent trading opportunities off of it. But again, this is one level of basing that we've seen. If you're a West Coaster, this is trading at midnight for you. East Coasters, it's a little bit early in the morning for us. But again, some great trading opportunities. And again, I would say continue to keep this one short. Now, euro dollar. Yep, there's the euro dollar. Was happy about this one. I got really concerned this morning. I missed exit on this one by about 9 pips. This is a level that we've been talking about nonstop. Coming up here around, setting our alerts at 2170. 2178 was kind of where we entered the level. It's a 4-hour level, right? You guys can see it right here. It's a 4-hour level. We've talked about this one for a while. We talked about it being the extreme level of the curve, starting at that the 2177. As you can see, nice move today. It's sitting down there right now, plus 38 pips. Perfect area for us to take it out. Again, we knew buyers were stepping in. Actually, let me, here, I'm going to move this one. And let's go back down, and we're going to move it here. And here, let's see. There's the European Open. There's the 9 o'clock candle. And you can see a majority of the movement, again, European Open. This trade, it's pretty much over at this point. We'll leave it on there. It's probably worth one more hit. We'll put it here. Oops. And we'll draw this up top. And again, if we can get back up there for European Open, worth one more. clean some of these up just to make it a little easier for you guys to see. Go from the left. We'll talk about this here, and we'll talk about that there. Now let's see. That's at 2177. Let me see. I'm gonna pull this up here so I can look at it a little easier. Euro dollar. Let me see. I'm just curious to see if we have one up there around the 21. Nah, we don't. The closest knockout on this one is 122.24, which is kind of way up in here. So it's a little bit too far away. So way to play this one is see what the Nadex call spreads look like tomorrow. Or not tomorrow, but in tomorrow's trading day. So it's 6 p.m. tonight when they print the new contracts. Maybe see if we have some type of a daily call spread up there. Maybe even see kind of what some of the binaries look like if you don't, if you want to trade in the overnight. So it's a decent level. We'll see. I think anything short, and I would remain, I would be looking to take this one short overall. 120.95 would be a level where I'd want to take all my profits regardless. I mean, the 1 to 5 is down here. I think is a decent level, but you don't want to necessarily mess with this level in here. So you want to make sure that you are out somewhere in here around the 121.10 at best case. All right, if you're going to get to anything. And again, parabolic move up, retracement down the next day is what we're following. Now, dollar CAD. As you can see, dollar CAD's having some crazy, it's just back and forth, back and forth, back and forth. This has been an oil story. We were looking for this to really punch higher, and it got stuck inside of a sideways channel. As you can see right now, it is respecting this channel back and forth. It's given us about 16 pips worth of risk and giving us about 45 pips to run back and forth. And it's hit here, hit the bottom, hit the bottom, hit the top, hit the bottom again. It's been pretty solid. I'm very curious to see where we are tomorrow with oil inventory, because again, if oil inventory is a miss and the price of oil goes up, that should strengthen the Canadian dollar. And again, if we are rallied back high in this level, 26.38, a strengthened Canadian dollar would also lead us to punch back down. We'll see how long we're able to continue here. So again, for you channel traders, there are neutral-based strategies that you can trade where you expect price to stay within a specific range. Well, I mean, right now you can see over the last day, it's maintained this range right here. And the question is, will we continue to kind of maintain that forward? And I think it's probably likely right now. Again, I know we have some larger time frame. You can see on a daily basis, this is a pretty rock solid bottom down here, right? And on a 4-hour basis, you can see that's where the daily clicks in here at 126 or 125.70. This is the consolidation for the daily. So, I mean, if you're going to draw a kind of a curve, right, there's where your curve would be, right? And again, the curve is used to form a bullish and bearish bias on the day, on the smaller time frames. We're sitting right in the middle of it, right? So again, small intraday neutral strategy sideways is what you would use. And again, if you don't know what it is, I call it a Nadex butterfly. You can find Nadex webinars on it. Dan Cook also has kind of taught and given data on how to trade it as well. Go back on Nadex's YouTube page or go to the education section on the nadex.com website. You should be able to find some of those on how to trade these neutral positions. Looking at dollar Swiss. So yeah, dollar Swiss. It had a small area up here at 90.16. It is still looking for buyers. And again, this is that kind of risk on type trade. And again, based off of everything that Powell said today, this makes complete sense. Overall, let me show you guys one thing I looked today. Here is the, let's see, it's going to load. Here is the Swiss across the board. Okay, the blue is the Swiss since the European Open. Obviously, you can see that every single one of them, the CAD Swiss up here has continued to rally. Euro Swiss continued to rally. Also, Aussie Swiss continued to rally. Pound Swiss continued to rally. Swiss yen continued to fall even harder. CAD Swiss continued to rally. This is a lot of movement with the Swiss. And again, it's showing you what the overall appetite right now is. And it's people looking for risk, right? It's people looking for risk because it's coming out of the Swiss. So interesting position. Like I said, the only one of these we can trade is the dollar Swiss. And with the dollar Swiss rallying as strong as it is today, I'd be looking for some type of reversal level. Unfortunately, right now, you can see it's driving back up again. The 4-hour zone, right, where we've had sellers step in the past is right at 90.40. I'd say, this thing has basically been 12 hours at this point of straight up, a little bit of a hiccup, in the late UK session. I'd be looking for a retracement, right? You got to be looking for it. Ways that you can trade this one is, again, we know here there's an hourly level. It's the hourly and the 4-hour. Again, look for the pattern. Look for a pushback, right? Look for a pullback that doesn't break the level, and then trade it on the way out to the downside. Oops, come on. You can do it. Back into there, right? And again, it's the same pattern. It's that confirmation pattern. And again, you'll have an established level of risk formed by using that level, right? And again, it's a little bit more of a push in, something along those lines. All right. So I'd be looking for reversals. I don't know if we have anything up there right now. Let me see. That's approximately 90-40. Actually, there's a 90. Again, if you like knockouts, if knockouts are your jam, there's a knockout sitting right 90-64, right there. There's a knockout sitting right up there. So knockout there, and where's the next one? Let me see. This is at 90, 93, 91, 14. It's kind of in between. So yeah, there's a way to trade this one. And again, with such a huge level above, maybe we wait till it goes higher on the dollar Swiss. But I'd be looking for any type of a confirmation to go south. I think this one is due for a retracement as well. Now, dollar yen. Yeah, we expected a break. We never really got an additional entry on this one. Again, we expected it to break. We had the 1, 2, 3 number 4s would broke, it pulled back, and it did give us another short entry. What do we do with this now? Actually, I guess this was the one from last week. We can take this off. Right now, I'd say I'm gonna take this one. I'm gonna steal this one. This level, yeah, we're still in it right now, but we'll delete it just to make it cleaner, not so we don't confuse people. I'm gonna mark this here as a tested level. And what I'm going to do with this tested level here is I'm going to actually draw a new curve from here to here. Okay. Reason why is, I mean, this is the hourly, right? It's not a 4-hour. The 4-hour is going to be a bit stronger, right? I'll put the overlay on. Yeah, that's a huge 4-hour level. Yep. So I'm going to use this from there to there. Reason why is because we have one test. We knew we had some basing, had a decent pop. We came back and we tested. So, when price comes down and tags this level down here at 104.83, that again, extreme range of the curve, looking for a pop back to go into the middle of the range. And again, vice versa. If we continue to rally higher, there's a little hiccup here, but there's not a whole lot stopping us until we get back up here to 105.76. Let's see what we got. Unfortunately, we'll have to knock out brackets to get a decent top on that one. 104. There is a 104. Let's see. 104.78. There's a 104.51, but it's a little bit too far away. It's all the way down here. It's not going to quite work. So knockout-wise, we don't have much on this one, unfortunately, unless we print good on when we stop out the top side of these things. There may be something up there. There's just, unfortunately, there's nothing. At 105.75, there's just nothing close. I guess, I'm wrong. Hold on. There's a 106. Now, the 106 is all the way up there. That's not going to work. There's a 105.50 here. It's going to get broken. Yeah, unfortunately, there's nothing to match up on this one. So, way to play this one. Wait for price to close today. See where the Nadex contracts print at 6 o'clock. And again, look for 104.86 as a bounce, 105.76 on the other side for a bounce. And we'll see where we go with this. All right, let's go across and look at the commodities. Now, I'm going to switch the commodities back to here. We've been running these over on this side, and this is our oil trade. We'll do actually, you know what? Let's do gold first. Gold is the most important. So gold is dominating everything. For those of you that have been following, we talked about gold expecting to break through this level, and it did. We went 1, 2, 1 test, 3, number 4, we expected the break. We based, we pulled back, and boom, we went higher. We talked about it being clean. 1813 would be the next reversal around this level where sellers have stepped in. As you guys can see, we hit this level, we turned around, we came all the way back down. We grabbed this level again and pulled back up again. So right now, what I would say is the two areas that we need to focus on the most are once again going to be, let me get this price tool. Where is it? Not that one. Is it this one? Yeah, there we go. The price label. I would say watch out for this one here, and we'll change this to, nope, that's not the one I wanted to change. I want to keep this light blue. I want this, and we're going to change this to red. And we're going to talk about this one coming back down here at 1794. It's basically 1795, but you guys get the idea. I think that's our top and bottom of the channel. Depending on when we rally, I would say that if we can get either top or bottom before the UK Open tomorrow, I think that would be a decent short or a decent long from either of those two levels. Again, we already know that based off of Powell's speeches today, we had a very, very strong push down, and then it was kind of like a just kidding. We pulled right back up into the middle of the range. We are in no man's land right now, but 1814 to 1794, I think, is the top and bottom of our channel. Again, that market's pretty much closed for the day. Wait to see how the rest of the day unfolds. If we can be at the top or bottom of them, and if you can get a decent, risk trade on either at the European Open, I think those are both decent. Also, keep both those levels in mind for the U.S. Open tomorrow. Obviously, if they're not broken, but I think either of those two is fine. One thing I will say about the 1794, I would not be surprised. Again, this was a Harry Potter here, and again, spent some time, touched it again. If we come down and base in this level, this also would have the potential to drop lower. So don't forget, depending on what the price action looks like, if we come to either of these two levels and base in them, those are the triggers, right? Those are the triggers that take the continuation higher. I do think this level to go higher, though, it's going to have a bunch to kind of push through. Not as much fun. Pushing through here, there is, again, just like there was this piece here, we kind of have these candles here to watch out for. So I think either of these two levels are decent. I think you could take either one of these, whether long from here, short from top. I think both of those are fine. Silver, yeah. Silver, we ended up punching through before we came all the way back down again. So I'm going to bring silver back up to an hourly. Now, remember, this was kind of a position we talked about last week, and it was tested. And as you guys can see, I mean, I'll drop it down to show you guys. In all fairness, we did hit and pull back, and it started to slow in here. Kind of was one of those things that we're like, yeah, it's probably going to break. And then again, it based. It was a bottom. It was a bottom. It was a bottom. It based in, stuck its head back out, and it basically told us that it was going to go short again. So we can extend this and adjust it for now. Like I said, silver is not really an inflation play, right? It gets a lot of oh, I'm like gold. It's not necessarily like gold. People try to make it seem like it was. Remember, this is supposed to be up at $50, right? Reddit said that they were going to take down Wall Street with this one. Obviously, that didn't happen. Right now, I would say here's our top for our extreme. We're going to draw off this level here, and again, we have a test there. So right now, kind of the same thinking. I would say that 28.16 is an area where we're willing to take this one short. Obviously, downside, we're still here at 26, right? Let's move this over a little bit, just to make it a little easier for everybody to see. Right there. We're going to extend this area across. This is most likely going to be a hiccup. And again, in any short positions, make sure that you are out of this one before we hit this level here. And we'll change this to yellow. Okay. So right now, I would say, if you wanted to draw trend lines, if you guys are like that, I would say that there's a decent trend right there. Not surprised that it turned. This was a little bit of a gap right here. Here's a level of basing and a touch right there. So again, not necessarily surprised, but is this an area we'd want to go long in? No, because again, this is the middle of the curve range, and it did. It shot down, stabilized, pulled up. I would expect this to be back down in the middle of the curve by the end of the day today as well. And again, UK Open would be one great time to analyze it. But I think overall, wait till we kind of approach either of the shoe levels, 28.16 or 26.11 on the downside. All right, so that was the three that we were looking at. I mentioned bonds. This is not something we trade, but you guys were able to see this. Look at this, another day of bond yields down. A couple other things we've talked about. Obviously the cryptos are getting hammered. Bitcoin is down 7,000 today, down 13%. Ethereum down 14%. Good old GameStop is again, they're looking for a heartbeat here in GameStop. You can see that this one is the Reddit world is over, I guess. And even Doggy Coin, I guess, those Doggy Coin traders, look at this. It's a great thing right through the floor. So again, be cautious. Even natural gas we don't talk about, but again, you can trade with Nadex. It is at an interesting level right now as well. Just trying to give you guys as much as we can. You can see that natural gas is also at a level where buyers have stepped in, and look at that. We're starting to see a little bit of a bounce. So again, with crude oil inventories tomorrow, definitely an important level to watch out for. See if this one comes back down. So with that said, that is it for today. If you guys, again, make sure you guys mark off your calendars. I cannot believe I'm saying this, that next week is next week is March. Yeah. March 2nd, next week, 12 p.m. We'll kind of break it down again. Don't forget, we do morning sessions. Next week, we are actually going to be moving our morning sessions ahead 15 minutes. Give you guys a little bit more time to prepare for the open. If you guys have any questions, you're more than welcome to email me, support@keeptradingsimple.com. You can catch me on Twitch. I try to stream every morning at 9:30. And if you have any questions overall, go ahead to the website at keeptradingsimple.com. So you guys take care. I will catch you guys first thing tomorrow morning. Good trading.